Welcome to Realcast, the weekly roundup of the real asset markets. My name is Richard Betts and I'm joined by Nicole Dines and Paul Strome. In a week where Omicron was as much of a topic of conversation as omnichannel at the retail fair MAPIC in Cannes, it was interesting also to see infrastructure hitting the headlines, with Christoph Schumacher of Manulife Investment Management announcing the closing of a $4.65 billion second infrastructure fund. And infrastructure also a big discussion topic at MAPIC as well. Nicole, what have you been following this week?
Well, real asset media always on trend. We held an infrastructure summit this week, focusing particularly on transport and logistics. And it seems that investors' appetite after the lull caused by the pandemic is coming back very strongly. And various governments, including the UK's government, sort of build back better drives, have also helped to sort of raise awareness of the infrastructure gap that exists and sort of given investors extra impetus to deploy money in the sector. So appetite remains very strong. There have been quite a few deals recently in Europe, especially in toll roads, rail and shipping. But the experts at the briefing highlighted that even during the pandemic, different segments were affected in very different ways. And for example, ports were barely affected at all throughout, while aviation has been badly hit and still has not gone back to pre-COVID levels because the expected bounce back hasn't quite happened. But as Tanya Soneva of CBRE Investment Management pointed out, even within the problematic aviation sector, there have been some good signs. Domestic aviation has recovered pretty well, while its international has not. And she said anything that has a cross-border aspect is problematic and is set to remain problematic for the foreseeable future. So a lot of caution on that sector. But more widely in the infrastructure transport sector, it's a very exciting time of transition and of new technologies, obviously to become greener, to reduce carbon emissions. Ben Segelman of DHL Supply Chain talked about the massive investment that they're making in the sector to decarbonize their business. But there are a couple of issues that everyone agreed are sort of problematic. One is that which technology will prove to be the best. It's not clear. People are investing in hydrogen, in electric, for example. Obviously, there's a strong need across Europe to invest in electric charging points, but there is also a real risk of sort of costly investments in infrastructure that then becomes quickly outdated. In some countries outside of Europe, you said that instead of charging the cars, they're investing in changing the batteries. So if that sort of spreads, if that becomes the most viable, the most convenient way of doing things, then all the infrastructure will not be needed, will become obsolete very quickly. So that's an issue. And the other issue that was pointed out was the impact of the pandemic, so that car and truck journeys have actually increased. Trucks for obvious reasons, because everyone wants things delivered, and that's still the best way or the quickest way of delivering in most places. But also on a personal level, people feel safer in their cars because of COVID. So they're actually using their cars more. So that's another issue rather than taking public transport. So, but it's, everyone agreed it's a very exciting time for the infrastructure sector. On another completely different field, the leisure sector, hospitality sector, Azora, the Madrid-based private equity real estate manager, has bought Blue Serena, which is Italy's second largest resort hotel operator. And Azora has been investing in the sector consistently, and its latest pan-European hospitality fund, the FCR, has already deployed over 55% of their 1.8 billion investment capacity. Blue Serena is very well known in Italy, has 13 resorts, 4,200 beds in places like Sicily, Sardinia, and Puglia, some of the main coastal resorts. And Azora said it will invest 30 million euros to improve the brand and invest in new hotels to sort of widen the brand. But Concha Ozakar, who's a co-founder of Azora, said that they continue to invest in the sector because they believe there is significant pent-up demand for leisure after the pandemic, but throughout Europe, so they see a strong recovery ahead.
I also noticed, Nicole, in that logistics discussion around the infrastructure side, the focus as well from DHL changing from being around focusing on where the transport hubs are, that for them actually being close to employees is becoming as much of an important driver, if not more so, than actually where the transportation side is. And I think that's going to be very interesting to watch going forward, particularly in terms of the location of real estate assets for the logistics sector. Paul, what have you been watching?
There are a few trends that we've previously commented on that have been illustrated by the news this week. For instance, property investment manager Heitman acquired a self-storage platform based in northwestern Germany called All Seasons Heitman said this was in line with its strategy of focusing on long-term investment themes and of smart diversification, while pointing out that it's managed self-storage investments since 1996 and currently manages more than $5 billion worth of the segment worldwide. In Europe, it owned 51% of Shurgard for more than 10 years prior to Shurgard's IPO in 2018. So Heitman, Senior Managing Director, Portfolio Manager Gordon Black, said that the acquisition and others like it in the UK have been timed to reap benefits anticipated from the expected institutionalization of the sector. The company also points out that in Europe, self-storage is young and fragmented, and the penetration there is much less than in the USA. Then we've covered lots of news about senior housing and healthcare recently, and separately affordable housing. But in the last week, Catella announced that its European residential fund has invested 80 million euros in a project in Holland that will combine these uses side by side. The project in Nijmegen is branded as Living In, that's in with two N's, which is a concept devised by the developer, Roos and Van Hop Group, and enables active senior citizens and those in need of care to live alongside first-time renters. The concept's not new to Catella, which already acquired an asset in Tilburg with the same brand, which is proving popular. And Catella and Roos and Van Hop Group plan to roll it out across the Netherlands. Lastly, for me, following its £350 million IPO last month, Life Science REIT, the company focused on life science property in the UK's Golden Triangle, has completed its first major deal, paying £77 million for the rolling stock yard office and laboratory building, which is near London's St Pancras Station. The property, which was completed in 2020, provides 50,000 square feet of office lab space. It's just over three-quarters let. Tenants include Gyroscope Therapeutics. Life Science REIT said that there are significant asset management opportunities. Obviously, these include letting the remaining space, but there's also scope to create more lab space. Life Science REIT alluded to the deal during its IPO, and it was clearly very close to fruition at that point, and the company paid cash for the assets, so presumably that the IPO enabled that.
Interesting to see, of course, that a couple of weeks ago, Nuveen also entered the self-storage sector by buying Green Storage. And of course, we were in Cannes for MAPIC, and although it was a much smaller fair, given that it was purely on the Riviera area, some interesting new initiatives there, like the TV studio, for example. And what was noticeable, I think, was in terms of projects, just how much there was from the Middle East. One of the projects, the Diriyah Square project, a 50 billion giga project involving huge amounts of infrastructure, but walkability and livability coming through greatly in terms of the concept. And interesting to interview there Jonathan Timms, and also see him on a panel as well, looking at that reshaping of people and places with Andy Watson. So it was interesting to be back in Cannes and see that, along with the social distancing side, that actually the fair could operate well and business in general seemed to be being done. Thanks very much for joining us. Thank you, Paul. Thank you, Nicole. And look forward to seeing you next week for our regular roundup of the real asset markets.